83 double stack trains as compared to 2,766 last year. We have added infrastructure also to give service to our customers. In this first half, we have commissioned 2 high-speed rakes, and we hope that in the second half, we will be commissioning 10 more rakes. So for this financial year, around 12 high-speed rakes will be commissioned by us. So now our total count of rakes stands at 380. We have procured 5,130 new containers in this first half. So total count stands at now 49,516 containers, which are owned by Concord. We are continuously adding more and more containers of tank containers. Then maybe for 40-foot types also we are going now for in first time for our domestic customers. We had earmarked a capex budget of rupees 610 crores for this financial year. In the first half, we have already achieved rupees 276.16 crore, and we may be looking at the capex budget very soon, whether we want to upgrade it, seeing the infrastructure requirements of the company. International, as you all know, because of the challenging geopolitical scenario, international supply chains are adversely affected. This has resulted in erratic vessel schedules. There is a congestion at transshipment ports, and there is less availability of slots in vessels for exports. These are the challenging situations being faced by EXIM trade of our country. Domestic loading was also affected in the second quarter, primarily because we had very good rainfall in North India and Gujarat, which affected our domestic loading. But I'm happy to announce that from this month, it has picked up very nicely, and we are getting very good growth in domestic in Q3. Despite all these challenges, the exports increased. For some commodities, there was handsome increase, like for ready-made garments, there was 41% growth, paper products, 31% growth, food items, 28% growth. Similarly, imports also, in solar modules, it was 126% growth, wood pulp, it was 20% growth. And I'm happy to inform all of you that Concord commenced rail services between Kandla Port and hinterland ICDs of North India. This is a new port where we have started the rail services. And we have posted ever highest PAT of rupees 371 crores in Q2. This is the highest for any quarter in the history of Concord. And this is despite the exceptional items of rupees 25 crores net of tax that one of the Vivad Se Vishwas scheme claim that we settled as per the directives of Government of India. If we add this 25 crore, then the PAT will further increase. So as such, 371 crore is a record for our company, a record PAT in any quarter. We had highest operating turnover, highest total turnover in any first half year, and highest PAT also in any first half, despite apart from the highest PAT in a quarter also. And the board of directors has declared a dividend of rupees 3.25 per share, which is 65% of par value. So till now we have declared a dividend of 105% for the first half of this financial year, which is around total outgo of rupees 322 crores for our shareholders. Focus area of the company remain total logistics solution to customers, business solution including warehousing and FMLM, and providing green and sustainable logistics to our customers. At this point, I would like to maintain the guidance that I gave at the start of financial year, that is for EXIM 15%, domestic 25%, and total 18%. Of course, in EXIM it will be a bit challenging, but I am quite confident that we will be able to achieve this. The new initiative, growth drivers for achieving this guidance will be some 3-4 growth drivers we have identified. First will be the bringing JNPT Nhava Sheva on double stack. that is through Varnama. By November end, I am confident that we will be able to start this service, wherein we will give benefit of double stacking to North India customers for Nama Sheva traffic. And I expect that there will be diversion of business from road to rail. So this will be a big gain for the company. Second will be the bulk cement in tank containers. I had a meeting recently with CMD of Messrs. Braithwaite Corporation, which is a sister PSU of Concor under Ministry of Railways. And he has assured me that by December, he will start giving us tank containers, which will be utilized for bulk cement movement. We are in touch with leading cement manufacturers. They are quite excited about it, and we hope to garner very good business in domestic in the coming months. Then we have very good demand for rice exports now, and especially at our ICDs at Nagpur, Raipur, Sonipat, etc. And we hope that in the coming months, already actually rice exports have started. After Diwali, the traction is going to pick up. So we will have very good rice exports in the coming months. All these things will add to our top line as well as bottom line. We have signed and we are still signing agreements of volume-based discounts with shipping lines, long-term agreements, 3 to 5 years. This will further cement our relationship with them and increase our business. So besides that, we will get business at new terminals that we are commissioned, and we will have more focus on DPD, direct port delivery movements. So all these 5-6 growth drivers will further enhance our business, and we are quite confident that we will end up achieving the guidance that I gave at the start of the financial year. This is all opening statement from my side. Now you can start with questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from ICICI. Please go ahead.
Yeah, hi. Good morning, everyone. Thanks for the opportunity and congratulations for a great performance in spite of all odds. I have a couple of questions, sir. The first one is on the LLF. So while we saw some kind of reversal of around 40 crores in this quarter, just wanted to understand the broad contours of it, that how do we see this LLF panning out for rest of the year, and what kind of LLF provisions we should take in our own models. And secondly, why this 40 crores provision right back? What exactly is happening over there?
Thank you, Amit. As far as LLF is concerned, this 40 crore actually provision we had made at ICD Whitefield. But now that the land rates are settled with railways, so we have set off in this quarter. So LLF is settled with Indian Railways. Now there is no further issue, and we are constantly, as I mentioned in my earlier conference calls also, we are constantly evaluating our terminals, that wherever we come up with new logistic paths, we surrender the railway terminals so as to have a saving on LLF without sacrificing our business. So same policy will continue. As far as the payment of LLF is concerned, it is more or less settled with railways. So we need not worry on that front.
Any guidance you would like to provide for FY25, sir, on LLF?
That will be in the range of 350 to 400 crores, not more than that. Yeah.
Okay. The second question is on domestic business. So EXIM, while it has performed pretty well, domestic also, what I see that it has bounced off compared to last quarter. But if I compare on YY basis, while our revenue has gone up, EBIT has fallen. So just wanted to understand whether it is due to the rail to the road competition from road guys, or whether it is due to more empty running, or just wanted to get little bit more clarity on this.
Domestic business has performed quite well. Of course, not as expected, but if you see year-on-year for first half, there is a growth of 14.5% in handling in domestic and 22% growth in originating TEUs in number of containers. Of course, it could have been better, but because of, as I mentioned in my opening address, very good rainfall that we had this year in North India as well as Gujarat, because Gujarat and North India are the major originating points for domestic loading. So there was disruption because of rains, and we could not get that much loading. But from this month, October, we are getting very good loading in domestic, and we are quite satisfied with it. So you will see in subsequent weeks, domestic will be doing extremely well.
So the more specific question was essentially that, revenue has remained flat YOY, while EBIT has fallen. So just wanted to understand whether there was some one-off cost item or something that was in this quarter that would not recur.
I will I request my director domestic to throw more light on this.
As our Shams decide. Actually, in this respect, whatever you have been underlining, my take is that for the last 3 to 4 months, or you may say that from the start of this financial, we have been losing a bit of market share in the domestic because the competitors on the CCPOs have been really very aggressive and have been giving very, very aggressive rate, and we were losing the business. In order to arrest that trend, we took a conscious call to let us first regain the volume, even at the cost of, some reduction in revenue and profitability. And subsequently, we will see what to do. So now I think that result we have started getting from this month only. And we have tweaked our rates positively also in some streams. So I think whatever negative trend, you see that our volume has increased, but our revenue has been flat. But from this month and whatever corrective action we took, now the customers are with us and they are ready to accept a bit of rate increase because of our services. So I think the positive result in revenue you will see from third quarter onward, and October is certainly showing very good green shoots on that.
Very clear, sir. Thank you so much, and all the best.
Thank you very much. The next question is from the line of Bhumika Nair from DAM Capital Advisors. Please go ahead.
Yes, sir. First, can you please share the originating volumes for this quarter?
Yeah, I will tell you. Originating volume of this quarter is EXIM. It is 576. Domestic 133,255 TEUs. Total is 690,831 TEUs.
Okay. So, sir, how are you seeing the trajectory now in October? There was this whole Red Sea and shipping disruption, etc., which had led to, heavy volumes kind of moving away from rail. How is that now kind of panning out in the month of October or of late?
See, October month, as I told you, we have got very good traction in domestic. Domestic, we are seeing very good loading across the country. As far as EXIM is concerned, imports are a bit muted. They're not growth is there, but not that much. But from the last 1 week to 10 days, we are seeing good demand of rice exports, and we have got firm indications. We are in touch with the trade that after Diwali, rice exports is coming in a big way. And imports are also going to increase. Because of the Red Sea disruption, there was, as I told you initially, erratic vessel schedules. Vessel schedules are erratic. They cannot be very, very predictable. So because of that, it was a temporary, you can say, dip in the month of October for the first 15-20 days. But now it is going to pick up.
Okay. Sir, can we also get the empty running charges for EXIM domestic and also the lead distances for this quarter?
I have for half year.
Yes, sir.
For EXIM it is 63.47 crores. Domestic it is 140.89 crores. Total is 204.36 crores.
And the lead distances, sir?
Lead distances for EXIM, for domestic it is 1318 kilometers. EXIM it is 705 kilometers. Total is 803 kilometers.
Okay. Sir, I mean, I'm sorry, just to circle back on this volume aspect. I know you've guided for, 15% in EXIM, but if you look at the first half, it's about sub 4% kind of a growth. So, which will mean that in the second half, we'll have to see that trajectory moving to 20-25%. That's the kind of momentum that we are seeing as of now?
Yeah, as of now, we, frankly speaking, that momentum we are visualizing because there is a very good projection given by trade. And we are, of course, I find it challenging, as I told my TV interviews also in the morning. Of course, we find it challenging, but we are quite confident based on the various sectors like rice exports and double stacking to JNPT. So these things are very, very crucial for trade, and they are well publicized. Trade is very much aware, and so we are quite confident that we will be able to get this target.
Okay. Great, sir. I'll move to come back in the question queue. Thank you so much.
Thank you very much. The next question is from the line of Alok Devra from Motilal. Please go ahead.
Hello, sir. Congratulations on good numbers. Sir, just wanted to understand this LLF. There's this 40 crore reversal. So, and you mentioned about 350 crore sort of a guidance for this year. So we are expecting some further reversals also in coming quarters, because the quarterly rate, I believe, was around 100 crore per quarter. So just
I told 350 to 400.
Got it, right. Okay.
So it will be near 400 only.
Near 400, got it. Okay.
Yes.
Okay. And then for next year, it would be around 7% higher types kind of number.
Yeah, you are well aware. The formula is that every year it should increase by 7%, but at the same time, as I mentioned initially, that we are constantly evaluating that wherever we set up new logistic parks and that logistic park is able to serve the hinterland for a particular terminal, then we move our business to logistic park and close that terminal, surrender it to railways. So that exercise will continue. Maybe next year we are able to commission some logistic park and surrender some land. So then it will have a saving of LLF.
Got it. And sir, on this guidance point again, I mean, you have maintained the guidance, but it's pretty challenging environment as the industry's indicators are pointing out to be. So in that scenario, such a kind of growth in second half, as you yourself mentioned, is challenging. So what is the bare minimum growth you could actually achieve if things did not pan out the way we are expecting? Bare minimum growth in the EXIM side?
See, normally from 1st October, we say that busy season has started in railways language. Right. So busy season has already started. Busy season means more business. So I'm quite optimistic that we will be able to achieve the guidance that I gave in the start of the financial year. And there are various pointers, and there are various, pointers that I am getting by interaction with trade. So this is that is why I'm feeling very confident to achieve this guidance. So I will like to adhere to it, and I'm quite confident that we will be able to achieve this guidance. I will not like to speculate on any other number.
Got it, sir. Got it. All right, sir. That's all from my side. Thank you and all the best.
Thank you very much. The next question is from the line of Dishi Giria from Ashika. Please go ahead.
Hello.
Yes, please.
So while you are maintaining the guidance level, Could you help us quantify what are the initiatives that you think would be contributing to this growth? I mean, the growth number is exorbitant, like the other participants had also mentioned. But could you help us quantify some numbers for it?
See, I already told the growth drivers, 5-6 growth drivers in my opening remarks. Now, which growth driver will give me how much number, that I am not able to tell you right now. Maybe separately, one-to-one basis, we can discuss and I can tell you.
Right. So my second question is regarding this Vivad Se Vishwas, the contractual expense that we had this quarter. So could we just explain what was this for?
Actually, this was a dispute between contractor and Concor, in which the Vivad Se Vishwas scheme is given by Government of India, that if arbitration award goes against the company, then this is a medium through which some 65% of that award we can offer to the opposite party, and if they agree, if they accept it, then we settle it and all the future court cases are avoided. There is no court case after that by the party. So it was some such dispute in some contract in which the arbitration award went against the company, and this contractor went for Vivad Se Vishwas scheme, and we also worked out how much money is payable, and then 65% of that we offered as per the scheme to the contractor, and he accepted it. So we had to settle it and we made the payment, and net of tax it was rupees 25 crores, which hit we had to take in this quarter.
All right, understood. Thank you so much, sir.
Thank you very much. Participants, to ask a question, you may press star and 1. The next question is from the line of Priyanka Vishwas from BNP. Please go ahead.
Good morning, sir. So this is Priyanka Vishwas from BNP. So my first question is, so what I understand now is that the Western DFC connection to JNPT is not happening before December 2025. So earlier it was March 2025. So in such a case, how would we be able to secure let's say, after double-digit growth in EXIM volumes in FY25, again, let's say a double-digit growth in FY26? Because what we are witnessing is a very steady erosion in rail modal share in JNPT. So if you can address this point.
Yeah, it's a good question. You rightly mentioned that Western DFC connection to JNPT will be in December 2025, as per the indications given by DFC officials. But we are going to give benefit of double stacking to our customers for JNPT. We have set up a terminal at a place called Varnama near Baroda, which is 400 kilometers from JNPT. So for North India customers, we will be running double stack train up to Varnama, because it's a unique terminal which is connected to Indian Railways and as well as DFC. DFC connectivity is under progress. Last week I have visited Varnama, I have inspected the site, and work is going on in full swing. Of course, it was affected because of the rains, but now work is going on at full speed, and we are confident that before end of November, the work will be commissioned and this terminal will be connected to DFC. So it will be having connection to DFC as well as railways. So we will run double stack train from Dadri and Kathuwas up to Varnama, double stack train on DFC. And from Varnama, we will break it into 2 single stack trains, and they will go on Indian Railways route up to JNPT for the last 400 kilometers. So, and a reverse will happen for imports. So in this manner, we will be able to have some predictability for our customers, predictable time at JNPT. And secondly, we will pass on some cost benefits for the containers which are moving on upper deck. So we are confident that we will be able to shift lot of cargo from road to rail as a result of this exercise. So that is the benefit that I made that is one of the growth drivers that I mentioned in my opening remarks, and we are quite confident to achieve this.
So, sir, just harping again on this, any particular reason why in JNPT the real coefficient is falling, and why and what is the coefficient right now? Because we have been seeing this trend for some time now. What may be the reason for it?
See, JNPT real coefficient at present is around 16%, in which the Concourse share is 58% for the first half of this financial year. The main reason is that lot of cargo has, for North India, lot of cargo has shifted to Mundra Port, which is giving a benefit of double stacks. And secondly, distance to North India is also less from Mundra Port to North India. And JNPT is now serving the hinterland around JNPT, for which the road becomes faster and economical. And JNPT is also serving the area of Nagpur, Hyderabad, and even we have started for Bangalore also. One movement we are doing for Visakhapatnam also from JNPT. So all these places JNPT is serving by rail, but primarily it is serving short distance traffic, which is more viable by road. So that is the most probable reason of decline in rail coefficient. But with the commissioning of DFC, we hope that rail coefficient at JNPT will rise.
Thank you, sir. That's very clear. And just one question I'm just squeezing in. So I think in 2Q, the railway does not levy a busy season surcharge. But from 3Q onwards, they again start doing it. I think it's 10%. So would that be impacting our margins on a sequential basis, at least on EXIM, if you can take that?
The railway is levying busy season surcharge throughout the year now. So they have not done any relaxation for Q2. But there is no cause of worry, because whatever tariff increase that we had from November of last year, that we are continuing. We have not revised our rates. So there will not be any effect on margins.
Okay. Thank you, sir. That was all from my side.
Okay.
Thank you very much. The next question is from the line of Mukesh Saraf from Avendus Spark. Please go ahead.
Yes, sir, good morning, and thank you for the opportunity. The question is around EXIM growth. So if I look at your origination volumes, they've grown around 3% this quarter. When I look at, say, the port volume growth at some of the major ports, obviously JNPT has grown at more than 15%, Mundra at 12% in the second quarter. So just trying to understand this gap is widening between our origination growth and the port volume growth. JNPT, obviously, you had mentioned that rail coefficients have been falling. But in Mundra, what we understand is rail coefficients have been going up as well. So could you kind of throw some light on the gap between the growth numbers for us and at the port level, especially Mundra kind of ports?
Yeah, as a matter of fact, at Mundra Port, the rail coefficient has come down, but our market share has increased. I will give you the numbers. For the first half of financial year, in Mundra Port, last year rail coefficient was 25.79%. It has become now 23.82%. So there is a downward trend as far as rail coefficient is concerned. But our market share was 36.35%, which has now become 38.83%. Like I told in the opening remarks, our market share has grown by 248 basis points at Mundra Port. As far as Pipavav Port is concerned, there is a drastic fall in rail coefficient. Last year it was 64.55%, and this year the rail coefficient is 57.42%. Whereas our market share has increased from 45.04% to 47.89%, which is a growth of 285 basis points. And all this we have achieved without sacrificing our margins. That is the beauty of it. So our margins are intact. Margins have in fact increased, and we have increased our market share as well as increased our margins. So that is a testimony of the excellent relationship that we have with our customers, and the operational excellence shown by our team Concor.
Great, sir. Got that. If you could also give these same numbers for some of the other major ports like Chennai, which you
I don't have numbers for other ports, but I have for city, Mundra and Pipavav, which I have already shared.
Sure. Thank you. And the second question is, I think you had mentioned in your opening remarks and in the last quarter as well that you're getting into these long-term contracts with shipping lines, maybe 3 to 5 year kind of contracts. While we don't want the details in terms of the commercials, but could you throw some light on pricing, etc., how these would work? Because these are volume-based contracts, and would you have to kind of bid at attractive prices to get those higher volumes? How does this work usually?
Yeah, it's a very good question. Actually, what we are doing is we are having long-term relationship with shipping lines, and big shipping lines we are big as well as small. It is for all. Actually, as you may be knowing, since last 1 or 2 years, the focus of the company is on providing total logistics solution to our customers. This is one of the focus area of the company. So we have 4 million square feet of warehousing spaces at our 66 terminals across the country. We are building more warehouses. Apart from that, we have become quite strong in FMLM also, first mile, last mile.
Sure.
We are having 130 LNG trucks for FMLM, and 200 more we are procuring. One more news I wanted to share with all of you. The first LNG pump in North India of our country is going to be commissioned this month only, next month in November, mid-November, at our MMLP Kathuwas. So because in North India we are constrained, we cannot deploy LNG trucks because there is no LNG pump, fuel pump. So that is being commissioned by IOC in our terminal at Kathuwas. So we have had a series of meetings with shipping lines at Mumbai as well as through VC, and we offered our warehouses, we offered our first mile, last mile, and we offer volume-based incentives. So all these things we gave them as a package that you use our services, and in turn it will be win-win situation for shipping lines as well as for Concor. So all these things they are part of this agreement that we are having with shipping lines. I visited the headquarters of Maersk, which is the second biggest shipping line in Copenhagen, Denmark, and they were quite excited when I told them about the green logistics, ESG norms being followed by our company, and total business solutions. So they have had internal discussions, and all of them are coming forward to sign these agreements with us, which are a comprehensive agreements. So ultimately, we are going for giving total service to our customers, and in the process, we will increase our margins also.
Right. So we should expect these value-added services to go up vis-a-vis, say, previous contracts to these new contracts that you're getting.
Yeah, that's right. We should expect more value-added services. Correct.
Got it. Thank you so much. I'll get back in.
Thank you very much. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
And thank you for the opportunity. I'll go ahead with my questions. First is actually more of a clarification. This 40 crore provision that you have kind of reversed and that links to Whitefield, does it have any impact in the manner that your incremental land license fees will be calculated? Completely different and not to be linked up to future land license fee numbers?
No, it will not be linked up to the future. This is a provision we made expecting that this will be the LLF rate. Once we settle it with Indian Railways, then whatever provision, if it is extra, then that has to be written back. That is what we have done. So future, I don't think it will have any impact.
Understood. Now, if I then assume this to be a one-off, it seems that your margins are much lesser than 25% at an EBITDA level. Just wanted to understand when you kind of gave this guidance on the interview, was this including other income that you were saying 25%? Or if it was not, if it was an EBITDA margin level before other income, then how do you bridge the gap from here on? Because today the margins are more like 23-ish or so. if I take away this benefit?
See, as far as our, if you see the operating margin is also quite high. It's a healthy operating margin. We have 33.65% operating margin in this first half of financial year. Rail freight margin was around 28%. And one more thing is exceptional item, Vivas, which was, that is 25 crores net of tax. So if we take all these things into consideration, I am quite confident that 25% EBITDA level can be maintained by the company.
Yeah, but this is including other income, just clarifying when you keep this number out, or excluding other income?
Of course, it includes other income also.
Understood. So that clarifies. Just moving on to the other questions, wanted to get a sense from you that this modal share coefficient issue is impacting assets that already have a DFC there. So it is actually impacting somewhat JNPT, but a lot more Mundra and Pipavav. Should this be something that one should be worrying about? Will it reverse around? What are the drivers of it? Because DFC should be supportive, right, over here. We're just trying to get a sense of why would this be happening and how to think through the future.
I'm not able to understand your question. Can you please reframe it?
Sure. Typically in Mundra and Pipavav, the modal coefficient should have gone up over time because DFC has been connected for some time while it is going down. Could you give us a sense of what is happening leading to this situation?
Okay. So now the Pipavav port is mostly serving the hinterland near Pipavav. So road becomes very competitive. Rail is not competitive for that short distance movement. For Mundra also, there is a lot of short distance movement, and apart from that, there is a movement for this CFSs around Mundra. There are around 35 to 40 CFSs near Mundra port, where many shipping lines prefer that they de-stuff their containers and take the cargo by road. So if they have urgency of containers near the ports. So all these factors also affect the rail coefficients. But of course, our endeavor is that maximum containers should come to the hinterland, for which we are creating so much assets. We continue talking to the trade and convincing them, and many times it happens also that they shift their pattern from CFS to the hinterland ICDs. But a lot of decision making is done by shipping lines.
Understood. Just a couple of questions more from my side. First of all, your other income or your interest income, if I see the cash flows statement, has meaningfully gone up from 1Q to 2Q. Could you give us a sense of what is driving this, and will this number again fall or be sustained at 2Q levels?
I will request my ED Finance, Mr. Harish Chandra. He will take this question, please.
You have rightly said, the other income, we have the income from interest, the dividend which we get from our subsidiaries. So these kind of income, the rental income. So this varies because, the dividend receipt from the subsidiaries and joint ventures, it depends the receipt of the dividend. And then secondly, we have also received one refund from Income Tax Department. There was also some interest element in that. So that is the reason that the increase in the other income is reflected. In last year it was 102 crores and this is 130 crores in this quarter. So that's the reason. Mainly the receipt of dividend as well as interest on the refund, income tax refund.
Understood. Maybe a last question from my side. I think we now better understand JNPT because you're saying that you will do double stacking and give more predictability and pass on some sort of savings to the customer. Could you give us a sense of how much would be the customer better off now when he makes a decision of choosing road and rail? And what kind of savings will you be passing on to the customer once you have the Varnama terminal ready?
You see, actually I cannot disclose it at the moment, but I can give you some idea about it. First thing is that when the container goes on upper deck, railway charges 50% of rail haulage. So that will be one of the savings that we will be having for 40-foot containers carrying lightweight cargo. So just to give you an idea, when from Dadri to Mundra port we were running double stack. When we started double stack trains, we tweaked our tariff by 8 to 10% for this lightweight cargo, and we had extra 12 to 15% traffic. So maybe Nhava Sheva may be around that number only. But right now the exact numbers it is not possible to give it to you.
And is there any other terminal alongside Varnama which may also come up from a competitor perspective? Let's say Virangam, for that matter. Is that a similar offering of double stacking that is happening till Virangam and then one goes to JNPT? Or are you the only one benefiting or going to benefit from this?
Virangam is actually not on that route. Virangam is a different. It will be taking off towards. It will be from Ahmedabad towards Mundra Port. So if you bring the train from North India to Nhava Sheva, Virangam will not come in between. Virangam will be a different route. From Ahmedabad to Mundra, in between you will get Virangam. So as of now, near Varnama, there is no such terminal which has connectivity to DFC as well as Indian Railways.
Got that. Thanks a lot for squeezing in all my questions and the color provided. Thank you.
Thank you very much. The next question is from the line of Srinidhi Karlikar from HSBC. Please go ahead.
Hi. Thank you for the opportunity. So just one clarification. So did you say there was a busy season surcharge even during quarter two?
Yes, please.
Okay. And so in that context, sir, what has driven the sequential improvement in the rail freight margin? Because if I look at the rail freight cost as a percentage of revenue, there has been a sharp sequential improvement. May I ask what has really driven this?
This is due to the operational excellence of Team Concord. As I told you, there is a growth in double stacking. There is 11.5% growth in double stack in the first half of this financial year. This first half we have handled 3083 double stack trains as compared to 2766 double stack trains last year. So this has contributed in a big way for reducing the empty running, which has positively affected the rail freight margin. And secondly, the domestic also, we are getting lot of loaded movement. Now empty movement has come down. In domestic, if you see, there is a 1.5% reduction in empty running, which is a remarkable performance. As compared to 143 crores last financial year, we have incurred empty running cost of 140.8 crores. So there is a difference of a reduction of 1.5%. So all these factors have positively impacted the rail freight margin, and it is improved by 80 basis points year on year. From 27.06%, it has gone to 27.85%.
Right. There's a lot of the factors that drove this improvement seems to be company specific. So do you think this very healthy rail freight margin adjusted for the mix changes, you would be able to retain in the second half as well?
Yeah, of course, we will be able to retain it, and I think we will be able to improve upon it because we are bringing JNPT also on double stack now. Plus domestic, we are seeing a very good traction. So all these things will positively contribute, and rail freight margin will further improve.
Right. It's the last one. I think Director Domestic did highlight some changes like increases in domestic business prices. Have you taken any price hikes in the EXIM segment as well in recent months in some nodes?
No, EXIM we have not undertaken any price rise because railways also not revised the prices, and domestic also we keep on changing. As such, we have not done any not across the board increase. And we keep on revisiting because domestic is a dynamic pricing kind of thing. Road, it is a direct competition with road. So we keep on revisiting wherever we have to bring it down, wherever we have to increase. So that is a continuous exercise by domestic division.
Yes. And so last one, how has been the first mile, last mile penetration now, and where do you think it going up by next year?
We are in this financial year, FY25, we are targeting 50% of our business that we are giving should be on first mile, last mile. So at present, on pan-India basis, around 27 to 30% we are able to achieve in the first half of this financial year, and we are continuously, working to improve it and achieve the target of 50%. And next financial year, we will set up a target of 80% of our volume should be first mile, last mile. We will be able to give.
Thank you for answering my questions. All the very best.
And we are getting very good margin also on this stream. For the first half of financial year, we have got 35% increase in first mile, last mile as far as revenue terms is concerned.
Yeah. Thank you for answering my questions, sir. All the very best.
Thank you very much. The next question is from the line of Amit Bhinde from Morgan Stanley. Please go ahead.
Hello, sir. I want to understand that there was an announcement made in September that there would be some discounts provided on the storage charges, etc., to boost the EXIM trade. So what would be the impact, cost impact for us on the EXIM margins, or increase in cost, in other words?
Yeah. Now I want to clarify, there is no concession on storage charges. It was in media also. The thing is that we are already giving 90 days free storage for empty containers. For empty containers, we are giving, in EXIM I'm talking, in empty containers we are giving 90 days free storage at all our terminals. And for loaded containers, we are giving a free storage of 15 days. So that is there for last, I think, 1 year. We have not changed it. There is no reduction or there is no upward movement in that. The thing that we revised was the empty handling charges at our terminal at Dronagiri. At Dronagiri, empty handling charges were in the range of 6,000 for 20 feet and 9,000 for 40 feet. So that we have brought down, and reason was that at present we have very minuscule empty inventory at our terminal at Dronagiri. So we are intending that with this reduction in empty handling charges at Dronagiri, at only Dronagiri we have brought it down. So we will get a lot of business, a lot of empty containers will come. So at present, suppose we are having an earning of 0, so at least we will get some earning. So that, keeping that perspective in mind, we have revised the empty handling charges, and there have been inquiries from shipping lines, and very soon they will be storing their empty containers at our terminal. So that will be like extra earning for the company. It will not be a loss at all. And as far as empty storage time, I again want to clarify, it is still 90 days free time at all CONCOR terminals. This is there for last 1 year. There is no reduction in that.
And how about the 50% reduction in the charge beyond 90 days? Was there already there? Or now that would come, or beyond 90 days?
Beyond 90 days, there is a uniform tariff. Then there is no reduction in charge.
Right, so I think the news suggested that there would be a 50% reduction.
Actually, yeah, that is in media, what was being shown was not in the correct perspective. Okay. So it's good that you have asked this question. So I hope it clarifies. If anybody has any doubt, they can ask more questions. I am ready to clarify.
Right. So the second question that I have is your guidance, as you were mentioning earlier, you mentioned that now the trends would be such that handling and originating would be growing in line itself, and there wouldn't be disparity. So the guidance holds on both. But here we see that your domestic has grown at around 15% in handling and at around 22% in originating. So now your guidance for full year, are you giving it on the originating basis or handling basis?
Handling.
Handling basis, okay. Sure, so those were my questions.
Okay, thank you.
Thank you very much. The next question is from the line of Kondanya from Jefferies. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So my first question is a bit on the macro side. Can you help understand what is the thought process in extending this busy season such? I mean, because we clearly see that file coefficient has been falling off across the ports. That stuff on the first one. And the second one, can you help us understand what is driving this market share improvement for Concor? What are the key reasons? If you can elaborate, please. Thank you.
See, for the first question, I am not the best person to answer this question because this was done by Ministry of Railways. But to be fair to them, for the last 8 years, they have not increased the rail haulage charges. So 10% increase, I don't think it was very much unjustified, I should say. But of course, the quantum was very high. That immediately it stopped the trade. That is my reply on the first question. As far as the second question is concerned, this is increase in market share is due to the customer centricity policy that we have been following for the last 1.5 years, plus the operational innovations, operational excellence that has been done by my team, operation team at Concor. These are the two reasons, primary reasons for increase in market share with corresponding increase in margin. There is no drop in margin also.
Okay. Fair, sir. So lastly, if you can also briefly touch base on some of the initiatives, because you spoke in one of the con calls that you're offering specific, you're giving specific offers to certain corporate groups. Can you provide some update on that? Where is it and what's the current status?
See, we are a PSU, so we cannot have one-to-one offer that is valid for one customer and it will not be valid for another customer. What we do is we design our schemes and based on the volume slabs. So whichever customer crosses that slabs, they are eligible to avail of that scheme. We are not designing scheme for a particular customer. We can't do that because we are a public sector company. So we have been doing it for so many years. Like volume discount schemes is there. If you give more volume, you get more discount. If your incremental volume is more, you get more discounts. So there are so many schemes like that we are doing it for exports, imports, throughout our ICDs as well as domestic. Domestic, we have business associate policy. So if they give more business, they become platinum category. Then there is gold category, below that, silver category, bronze category. So it is all the thing about whatever volume you are giving and what is the incremental volume as compared to last year. These are the two basic criteria that gives incentive to our customers.
Sure, sir. Thank you very much and wish your team a happy Diwali.
Thank you very much. Same to you and your team.
Thank you very much. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thank you so much for taking